This is not legal advice, the only educational strategies I've seen people use to fight back against charge-offs and sold accounts. Some of these hacks are advanced, so take notes, especially the tax season trick that most people don't know about. Section 1. Understanding sold accounts. Once an account is sold, the original creditor often reports it wrong. Example, they'll still list it with a balance when technically it should be zero because they got rid of it. Hack mindset. If you can prove it was sold, you can challenge the way it's showing up. Section 2. The 1099C/tax hack. When a creditor cancels a debt, they may issue a 1099C form for tax purposes. During tax season, request the 1099 from the creditor to prove they canceled the account. Then show that proof to the credit bureaus and dispute. If the debt was canceled or sold, it shouldn't still be reported as collectible. Section 3. Other advanced hacks. Double reporting. Sometimes the original creditor and collection agency both show the same account. That's a violation. Balance mismatch. If the amount doesn't match what's in the charge-off notice or collection letter, that's leverage. Date of first delinquency, DOFD. If they re-age the account to make it look newer, that's illegal under FCRA. Section 4. Tactical moves backdating letters. Remind viewers from Script 2. Sending regular mail instead of certified to trap them with USPS date stamps. Filing CFPB complaints once you have proof like a 1099 or misreporting evidence. Section 5. Wrap-up. Charge-offs and sold accounts aren't always the dead-end people think. By requesting a 1099C, looking for double reporting, and challenging every date and balance, you can force removals. Next, we are going into validation letters and settlement strategies. Flipping the tables on collectors. Sample dispute letters are in the description, and if you want the advanced playbook with these hacks, the link below. Smash that like and subscribe. It's free, and it keeps the hacks flowing for all of us chasing financial freedom in 2025.